Did you know that some people legally avoid paying millions in taxes, while others get fined or even jailed for trying the same thing? How is that possible? Well, it all comes down to whether it's tax evasion or tax avoidance. Let's break it down, because knowing the difference could save you a lot of money or trouble. Let's start with tax evasion. This one is simple to explain. Tax evasion is when someone deliberately breaks the law to avoid paying taxes. Examples include underreporting your income, not filing tax returns, or claiming fake deductions. It's illegal in every country, and if you're caught, you could face massive fines, or interest on unpaid taxes, or even jail time. Now let's move to tax avoidance. Tax avoidance is the use of legal methods to reduce the amount of tax you owe. For example, contributing to a retirement savings account can reduce your taxable income. Or if you own a small business, you might deduct the cost of equipment or office supplies to lower your taxable profit. All of these are legal strategies to reduce your tax bill. Sounds pretty smart, right? Well, yes, but not always. You see, while tax avoidance is generally legal, it can sometimes cross into a gray area. When someone or a company aggressively exploits loopholes in tax laws without a legitimate economic purpose, it can be considered abusive tax avoidance. Tax authorities, like the IRS in the United States, have rules against abusive tax avoidance. Courts can challenge and even overturn certain strategies if they are deemed purely designed to dodge taxes without a legitimate business reason. In fact, many tax systems have something called a General Anti-Avoidance Rule, or a GAR. A GAR allows tax authorities to strike down transactions that technically follow the letter of the law but violate the spirit of the law. For example, let's say a company sets up a subsidiary in a country with very low tax rates, but its subsidiary doesn't actually do any real business. It's just a mailbox. That could be considered abusive, and tax authorities might force the company to pay taxes as if the profits were earned in their home country. So, the takeaway: tax avoidance can be legal, but if it becomes too aggressive, it can be challenged and even deemed illegal under anti-abuse rules. So to sum it up, tax evasion is illegal and can get you into serious trouble. Tax avoidance, on the other hand, is legal, but it has to be done properly. If it looks like you are bending the rules too much, you could still end up on the wrong side of the law.